I just got notified it's streaming. I don't
Yay.
I don't guess it's my Wi-Fi, so I apologize. I'm 2 seconds here to see it go up. I guess my internet has left to go to Memorial Day weekend at the lake. And
Yeah.
so I have to apologize for anybody that was waiting for us to tune in. My Wi-Fi was not working, and that's just sometimes how things go. So Amy saved the day, and it looks like we are streaming live now. So I'm just pulling that up here. All right, let's kick it off. My name is Morgan Bauer Brown. I work at Schuler Bauer Real Estate Services, and I am here today with Amy Schuler, and we're going to do a virtual homebuyer seminar. So thanks so much, Amy, for joining us. So tell us a little bit. Actually, it's your 1 year anniversary today. Is that today?
It is. Yeah.
Yeah. So this is perfect timing. So tell us a little bit about what you do.
Sure. So I am a mortgage broker with Kentuckiana Mortgage Group. And being a mortgage broker means that basically we work with a bunch of different lenders to help people that are looking to buy a home find the best lending products and lenders and rates for their financial situation. So that's kind of my part in the whole home buying process. Like you said, I've been doing it for a year today, so very exciting. Yeah.
That is exciting. And so, what we were going to kind of do, we appreciate anyone who's tuning in now, or maybe watching it later, or maybe if you're watching it, you think someone could take some knowledge from this, share away. What we're going to talk about is just kind of some myths that people think about buying a home. And we kind of broke down, we have a few of them. 5 was what we went with, but we kind of threw a couple extras in at the last second. So, we're just going to talk about 5 myths today and buying today's market. So, a myth that we hear all the time from first time home buyers or any type of buyer is that the only way I can buy a home is if I have 20% down. And that's not true. So, tell us a little bit about that.
Correct. So that's a really common misconception. 20% is kind of the number that people float because if you do put down less than 20% down, you will pay mortgage insurance, but you absolutely don't need 20% down to buy a home. So we offer all kinds of different programs for people with less than 20% down. So a couple of examples would be USDA rural housing. So where in our area, actually places that aren't really all that far out qualify for USDA rural housing loans with 0% down. We also work with some companies that offer down payment assistance. And so essentially that is a secondary loan that you would take out to help pay for your down payment. So if you don't have a down payment, that's one route you could take as well. Other than that, we also offer FHA loans with as little as 3.5% down or conventional loans with as little as 3% down. So we have all kinds of options. And again, the best one really is going to depend on your financial situation, what down payment you have available. And really that's the power of working with a mortgage broker is we have lots of options and we can help place the buyers with the best loan for their situation.
That's all great information. Yeah. Because a lot of people think, oh, I've got to save up all that money for my down payment. So just knowing there are options out there. And like you said, you can sit down and pick which one works best for them.
Absolutely.
So that's great information. And if anybody ever has any questions, you can comment below, or you at the end, we'll put our information out there. So if you have any questions, Amy can follow up on that too.
Morgan, can I pause you for a second? I'm not tracking the questions since I haven't.
I have it up.
Okay, perfect.
I was able to do that. So good.
Perfect. Okay.
Teamwork right there.
Yes,
Teamwork
right.
makes the dream work. There we go. All right, cool. So if anybody has any questions about programs, so many different options out there for you. And it's just a matter of, there is, like you said, there is some non-down payment. So Indiana housing, Kentucky housing, those programs though, right now are kind of paused in this unknown time, or what's the status of those?
Kentucky housing is still business as usual, as they've said. So no changes there. And then some lenders have kind of put some overlays in. Basically, they said before all of this coronavirus craziness, it was like, here's the standard for lending. And now with all of the economic uncertainty related to coronavirus, they've kind of raised their lending standard to kind of lessen the pool, lessen their risk a little bit. But the programs are definitely still available. So absolutely talk to a mortgage broker about what's available to you.
Okay, perfect.
Mm-hmm.
So the next myth that we hear is that you have to have a perfect credit score. So can we take like a deeper dive into credit scores a little bit? Because I think it's a very unknown thing that people don't know. So tell us about some credit scores and requirements or anything like that.
Sure. So credit definitely is very important in determining your eligibility for a loan. So but you don't have to have absolutely perfect credit to qualify for a loan. In general, the better your score, the better rate you will get, and the lower your monthly payment will be. But we have lenders offering programs, loan programs in the mid 600s still. So you don't have to have perfect credit to qualify for a loan. And each of the different programs that we work with have different credit requirements. One thing that does trip people up occasionally is they will be tracking their score via Credit Karma. So don't get caught up in your Credit Karma score. That's a common thing. Talk to someone, a mortgage broker, who can pull your credit and see what the credit reporting agencies are reporting your credit score as. When we pull credit scores from all three credit reporting agencies, and then the lender will use the median of your three scores to determine your loan eligibility. So again, that's a great chance to just talk to a mortgage broker about where's your score right now, where does it need to be to get a loan, given where your credit score is, what you qualify for, and then maybe what are some ways, this will be different for everyone, but what are some ways that you can improve it, and how quickly can you do that? Those are definitely things we can always help with.
So you guys kind of sit down and talk to buyers. Like if I walked in today and I didn't have a credit score, or if I had bad credit, you can kind of counsel me through some steps that I should take. Because a lot of people, I don't think exactly what your credit even indicates, as far as like what credit agencies are looking at. Because they're looking at, I guess, length of history of your credit, usage of your credit.
Yep.
What are some other things? I'm trying to think. I'm probably putting you on the
Those
spot.
are big ones. Like you said, usage. So the balances, if you have credit cards, you want to make sure you keep those balances low, because that's a big thing that can impact your score. Timeliness of your payments. So make sure you're making all your payments on time, at least that minimum payment. Like you said, how long that you've had different trade lines in effect. So all of those things go into these complicated credit algorithms to put together one little score that means a lot. But we can always help and get you a detailed credit report and kind of talk you through it and things that you can improve upon.
Okay, that's great. Yeah, because like they don't teach you that stuff in school. Like, I mean, credit score is so important. And I know my dad's like always harped on me, and I'm just like, that's not something they talk to you or teach you about. And for a long time, I was always guilty of just checking that one score. And then when I got my credit pulled first time, I'm like, that's not correct. My Credit Karma says my credit score is this.
We get that a lot.
You do get that? Yeah. I'm like, that's all right. Okay. So going into kind of myth number 3, that
Yep.
right now is a bad time to buy. So kind of what are you seeing? I know what we're seeing on the real estate side, and I mean, inventory is low. So it's actually, I mean, it always depends on your situation, but it's really not a bad time to buy.
Yeah, from a lending perspective, it's really not a bad time to buy either. The rates are still near historic lows. So that's great. So like I said, some lenders have kind of restricted the population that they'll lend to, just to mitigate the risk, because the things are still kind of uncertain with the economic environment. But other than that, I mean, the rates are still pretty good. Other things that people think about when they're kind of deciding is now the best time to buy a home is people don't want to get out right now. People want to stay safe at home and all of those things. And the great thing is we can do that. So actually, most of our loan process, from getting pre-qualified to collecting all your documents to submitting to the lender, all of that can be done virtually. So really the only part that we have to do in person is the closing. So a lot of people kind of get concerned that they don't want to be out right now, but we can do everything virtually. So it's really not a bad time to buy a home in terms of rates and eligibility and ability to do things virtually.
Yeah, and like just thinking back to even like November, December, January, crazy times with the market. There were more homes on the market. I mean, we're in a shortage, but as a buyer, you were bidding against multiple and multiple offers. So we still are seeing that. And I think people are surprised by that when I tell them that the market still is moving, things are happening, but you're not seeing as many multiple offers. I think you're going to be seeing them real soon though. So as a buyer, it's kind of good right now to get in when maybe somebody else is sitting at home thinking, I'm going to wait till all of this passes and, rates could go back up. You could lose buying power through that, or there just could be more competition with more buyers thinking that way. So it's
Absolutely.
not necessarily a bad time to buy. We are taking, like you said, safety precautions. So just changing it up a little bit, but talk to your lender, talk to your realtor, and they'll make sure that it's really not. So, all right. Do we have anything else on that one? Now is a bad time.
No, I think I covered everything.
Okay. The only question that we did, sorry, I probably meant to write this down. Oh, we have a lot of questions with people who are given back to now is the bad time. What if someone was furloughed right now? Like how does that play into this?
So that is kind of tricky. Unfortunately, if you're furloughed right now, you won't be able to close a loan. Hopefully that's kind of started to settle down, and that anyone who would be or will be furloughed kind of has been, and they kind of are aware of that. It was really tricky in the beginning where loans that were actually active in process, and people were getting furloughed and they couldn't close. And so it's really unfortunate, but hopefully kind of all of that process has settled down. So if you are currently furloughed, you will not be able to close a loan. Um, but once you get back to work, hopefully things are starting to reopen. People are going to start getting back to work, and that will be less of a concern going forward.
Okay, good. And if anybody has any specific questions about that, Amy can answer those privately off of the Facebook Live world. Yeah, so our next kind of myth that people think is that when they get pre-approved, they think that maybe that's the amount. Just because I'm pre-approved for 100,000, I should buy a home for 100,000. So we kind of want to talk about just, not being so focused on that pre-approval amount, but thinking about other elements that come into play and knowing your budget. So do you want to talk about that a little bit more?
Absolutely. So I would definitely advise, kind of like you said, know your budget, know how much you're comfortable spending each month, and back into your purchase price that way. Rather than saying, how much can I get pre-approved for? Say, how much can I afford to pay each month? And then back into your purchase price that way. Because there are all kinds of things that if you've never owned a home before, you may not think about. So there's homeowners insurance, property taxes, potentially mortgage insurance, in addition to your monthly mortgage payment. And so all of those things together, you want to make sure that you're accounting for all of that when you think about how much you can afford each month. And then of course, in addition, if you're a first time home buyer, you may be shocked by some of the unexpected expenses of owning a home.
Yeah.
So you want to make sure that you've got some wiggle room in that monthly budget to in case those expenses do come up. So absolutely, you don't want to focus on how much can I get, but how much am I comfortable paying each month, and go from there.
Yeah, I think that's great advice. I always tell people that you're married to that mortgage payment each month. The sales price, I mean, it does matter, but each month you have to make that payment. So when we're looking at homes, always let's look at that payment. Let's look at what the taxes, especially in Indiana, taxes are very different in Indiana versus Kentucky. So our taxes at one property could be 1,500, at the next property could be 3,000 with no exemptions, and the sales prices could be very different, but you have the same payment. So know what that payment is. Like you said, that's super important. So that's great information. Our next myth is going to be it's cheaper to buy a fixer upper. I always, a lot of times hear people, the first thing they want to do is they want to know about a foreclosure that they've seen, or especially off Zillow. No, no, no. Uh, get off Zillow. Don't let Zillow see this. But they want to see that foreclosure. They want to do something like that. And I think it's smart, a conversation for first time homebuyers to think about, especially, is home ownership does mean that when that gutter falls off or the furnace goes out, it's on you. And so also just to that point, sometimes foreclosures can't be financed. So, and how does that affect you guys when it talk about the condition of the home?
So the condition of the home is super important. Depending on the loan product, you'll definitely talk to your lender about if you're interested in a foreclosure. talk to them about your options, talk about potential issues with appraisals, and it'll be so different between the different lending products. But making sure that your home appraises for a fixer-upper can be a little bit concerning. And also, a lot of times, so we talked about with coronavirus and everything, lenders are kind of restricting their lending. So they've restricted not only the buying pool that they'll approve, but also some of the products. So for example, prior, a couple months ago, we did have some home renovation products that we could offer where you could purchase a home for this amount, but then get your loan for this amount and have the difference to work on some renovations. And nobody's really offering those anymore. So they've not only restricted the buying pool, but they've also restricted the products a little bit. So if you are interested in a fixer-upper, just know that it's a little more tricky to finance now than they have been in the past, and make sure that you're talking to your lender about that up front, because there may not be products available to finance that right now.
Yeah. And if you have your heart set on a foreclosure, if there's a will, there's a way. It's just, I think a lot of people in general think like they think it's going to be a lot easier. And a lot of times with those foreclosures, you're buying them as is, they're selling them as is, they're not turning utilities on possibly. So you just want to make sure you understand the difference between, what you're purchasing and what the process might be for each home. Okay, so that's our 5 kind of myths that we have. And we kind of wanted to throw a few extra at you. So just kind of the first one that I kind of wrote down was that you should choose a lender that's advertising the lowest interest rate. Sometimes somebody might say, I can have an interest rate here. But what a lot of people don't understand, I guess, is that there's other costs associated on the back end, you would say. Can you explain that?
So the interest rate you always want to pay attention to is the APR. And so sometimes you might see this big interest rate that says you can get it as low as X, and then APR is X plus a lot. So always pay attention to the APR. The APR accounts for discount points. So on any given day, you can buy up or down your interest rate. So if the par rate being offered is 3.5%, but you'd like some help to cover your closing costs, then you could always take 3.75 and get a credit from the lender to help cover your closing costs. Or you could also bring more to the closing and buy down to 3.25, for example. So on any given day with most lenders, you can buy that interest rate up or down. And so the APR accounts for anything extra that you're paying for that interest rate. So always when you're comparing interest rates, make sure you're comparing the APR. Then also think about closing costs and things like that. Different lenders are going to have different closing costs. So make sure you're paying attention to those. If you are working with a mortgage broker, you can always ask for a loan estimate, and you can compare loan estimates among the different mortgage brokers and just look in detail at all of those closing costs and fees associated with it.
Yeah, because like a lot of times, if you're a first-time home buyer, you might not know that when you get a loan, there are closing costs associated with that loan. So you might be, oh, I'm going to get this really low interest rate, and then when you show up at closing, you didn't realize that was going to cost you, I don't even know, $4,000, $3,000, or whatever for your.
Hopefully your lender doesn't make it to the closing table.
Yeah, oh yeah, I think
Yeah.
we changed
But
it.
it's
Back in the day, in 2007, that stuff happened, and that's why they changed all the rules for the good. Yes. So yes. Okay, so our next myth is kind of that it's cheaper. A lot of people, I think it's cheaper to rent than own. And so I challenge anyone who might be watching this now or later to, if you are paying rent, and I think we have the numbers. Do we have the numbers? Okay.
Yep.
So if you're paying rent of whatever it might be, but for this example, we're going to do $1,000. So if you're paying rent $1,000 in an apartment complex or at a house or whatnot, Amy, what price point what could I buy today if that was my rent?
If you have a 3% down payment, then you could get a home like 150 to 160 for $1,000 a month, which would include your mortgage payment, your mortgage insurance, homeowners insurance, and property taxes. So
Wow.
your whole mortgage payment would be about $1,000 for that price range.
Wow.
Give or take, depending on your homeowners insurance and property taxes and things like that.
Yeah. So, I mean, if you're paying rent today of $1,000, you should definitely think about, okay, what are there homes I can afford? Amy just told me a great price point I could look in, because there are definitely perks of homeownership with your tax deductions, and also just the equity you're building. If you are going to be living in this home for 2 to 3 years, 2 years is usually, so you don't, that's a good number to look at. You're going to be building that equity. If you're renting is not a good thing though for anyone who is maybe transitional, is moving from here to there, doesn't have a place to stay. That's not always wise to go ahead and buy a home if you turn around and sell it in 6 months. But definitely something to consider. And if anybody wants to comment below on their rent that they're paying, we'll be happy to send you some homes that you qualify for or what you could qualify for. So that's something we always like to talk about. Let's see. And then the last myth is you can't buy a home if you have student loan debt. I hear that all the time. So what's the scoop on that?
You can absolutely still buy a home if you have student loan debt. What really matters is your debt to income ratio. So when the lenders look at your total portfolio, they're going to, or your total loan application, they're going to look at all of your monthly liabilities, including that student loan debt, divided by your monthly income. And that amount is known as your debt to income ratio, or your DTI. Lenders typically like to see your DTI below 50%. So sometimes if your student loan is in deferment or you have a specific payment plan, that will really help in lowering your DTI so that you can get approved. So all kinds of things to think about with that, but just because you have student loan debt does not mean you won't qualify.
Okay, that's good to know, because I think sometimes when you're coming out of school and you have that, you're thinking, well, maybe I should just go rent because I don't think I even qualify because I have these student loan debt. So that's great information. And those are really the myths that we just kind of wanted to tackle today. I always have a question that I know that you get and I get a lot that I just want to clear the air on. So this is a PSA. So the question I get a lot is, Amy, if I qualified today for $100,000 on a loan and I just want to buy an $80,000 loan or house, can I get that extra 20 back?
You cannot. So the lender will lend to you based on the lower of the purchase price or the appraised value. So that can be the maximum loan amount.
Big no-no.
Yes.
Okay. That's a question we get a lot. So I'm just trying, we're starting a PSA for it. Public service announcement. You cannot, maybe, Chase Bank might call me up and say, thanks for that. So, we've had some viewers today. We don't see any questions below right now, but of course, if anybody has any questions or if they'd like, we actually do have a slideshow presentation of this with a lot more information, and I can comment below with Amy's information if you'd like to reach out to her privately just to talk about maybe if it is a good time for you to buy and maybe just plan for the future. So, I appreciate you joining me today, and I'm so sorry about my Wi-Fi problems.
That's okay. We got it figured out.
My computer says it's Memorial Day weekend and it's ready. The sun is shining and it's a beautiful day. So it was like not time to work. So, do you have anything else? Anything for the people?
No, thank you so much for having me. And yeah, if anyone watching now does have questions about purchasing right now or any kind of financial questions, feel free to reach out to me. I'll put my phone number in the comments maybe, and then that way you have a point to reach out to. So
yeah. All right. And of course, if anyone needs a realtor, we have plenty of wonderful realtors at Schuler Bauer Real Estate Services. They'd be happy to help you with your buy-side purchase. So feel free to message us or anything like that on that. All right. Well, then we are going to sign off here, and I appreciate your time so much.
All right. Thanks, Morgan.
All right. See ya.